What's the reaction in the C-suite? And when you go in and talk to people about possible acquisitions or mergers, they say, if it's in Europe, don't talk to me?
Don't think about Europe.
At all.
At all. And nor would you want to. You want to. Today, there's too much uncertainty about what this will look like, and we'll have a much better sense. The assumption is March 29th won't matter. We will go through it. You'll be in June. You'll figure out where this plays out. Presumably, Theresa May stays right where she is for months to come as this is getting figured out. Once you have that, companies will then say, where do we want people? Where do we want assets? Where do we want business?
So what would you have to see to want to have deals done in Europe? Would it have to be an actual concrete resolution and 100% clarity, or is there something else that would give you more confidence?
I'd want clarity, Alex. I think it's time.
I think that's a tough ask.
Well, time is just the prudent thing to do. There's just too many ways this could go in too many directions. And if you do something that is inappropriate financially, it stays with you for a long time.
So let's move to mergers and acquisitions more generally, moving beyond Europe here. I'll put a chart up, actually, that shows sort of the level of activity global. Now, this is global.
It's high, right? It's good.
It's good, exactly.
Okay,
not as high as 2015, but still, it's right up there in 2018 at least. Now, we had a lot of uncertainty here in the markets in December. Where are we going into 2019 in terms of mergers and acquisitions?
I think the environment is just fine, which 6 out of 10.
I hate the word fine.
Because that's what it is. It's not better than fine.
fine.
It's not better than fine. We had a very slow fourth quarter. It was down 30% on volumes versus 17. We had a high yield market. December was the only month in 30 years we didn't have a high yield deal. January started off the same way. We've had $250 billion of transactions so far. Most of it coming from one big deal, Celgene, Bristol Myers. I think that the pace will be below last year's $4.5 trillion globally, which was the second largest ever. But we'll end up in a market that reflects tailwind for the economy, and that reflects what's really the biggest trend: disruption in every single category, every single sector. That's what's driving M&A. So we'll end up the year doing well, but it won't be like $4.5 trillion.
Is the balance of acquisition versus disposition shifting? Because we're seeing some big dispositions now. We saw AB InBev, they're spinning off Asia, for example. We see Dow DuPont spinning off. You see some of those. Is that balance shifting?
That's a great question, David. Not yet. I think the goal of investors for more focus is encouraging more companies to do just what you're talking about. I think it's really incumbent upon a company to step back and say, are we doing something because it's the flavor of the month by focusing down? Or do we think it's the right thing for our business? Can we manage in 2 or 3 or 4 different industries or different sub-industries? And you have to be thoughtful that says, do I have the company I want for 10 years and beyond generationally, not just for next year? But I think dispositions will actually continue to be very active this year. Big scale M&A will be muted, frankly, versus years past is my bet. And by the way, last point, as you get towards the end of 19 and you start to think about 2020 and an election and all of the discussion and the rhetoric and the heat that comes, it's going to have an impact on people's thinking.